Hi, this is Scott Murray, and welcome to the Daily Economic Market Shout for the eyes of June, June 15th, 2023. It's great having you with me here today. And retail sales, a healthy number. Yes, we saw autos moving higher, unit auto sales have been lower. So, that is going to move the number around a little bit. But when we look down into secondary categories like on-store retail, one of the highest moving categories, we actually see pretty healthy numbers. Building supplies doing well. That's telling you that the consumer is, they're looking at their house going, don't want to sell, got my 3% mortgage. I'm going to do some, some add-ons, some improvements to the house. I am good. And I think that's a clear sign. When we ended the first quarter, we saw weakness. When we're starting the second quarter, we're seeing strength. What's driving it? Well, healthy markets, that helps, and also jobs. And we got both right now. And I think even though we got some cautionary tones from the Federal Reserve yesterday, in terms of higher rates going forward, I don't think the markets or even the consumer are that worried right now in their job prospects. So you got to look ahead and see that growth will probably be north of 2% in the second quarter. It's going to be hard to get to the recession by the end of the year. Maybe it gets pushed back. Maybe it's a soft landing. That's really where it looks to right now. And I think what's underlining this is a feeling of green shoots. Like green shoots are spurring up out of the market, even though some major corporations, particularly in the tech, are suffering. I think that's where we're going to get the earnings momentum moving forward in the marketplace. But we should be cautionary. We are seeing layoffs. We saw initial claims moving over 260,000, moving up the average, getting close to 250. So yeah, we're now seeing, and we can actually see in concrete, the movement up. We've talked about the volatility in the state data. Yeah, we saw volatility. We saw Texas, we saw Pennsylvania, we saw Minnesota, the outline of their normal procedures. However, we didn't see any major movement down. So that kind of tells us that the direction is up. Now, continuing claims, which really shows the absorption level in the economy, continue to be modest, 1.8. We had seen it moving towards 1.85 million, but it just kind of came back. Is 2 in the offing? It seems likely now that we're starting to build the initial claims, and that should cascade. Now, this will be the challenge that we'll be seeing. We probably get early signs in the continuing claims numbers about the absorption. Yes, Jolt just told us there's lots of openings. So these people who are getting laid off, filing for their initial claims, should be rehired pretty quickly, not immediately. So how is that going to work through the economy? We'll see it. Now, if they don't get rehired, that's an additional flashpoint there. On the regional numbers this morning, Empire looked a little better. Clearly, it had a huge step down. So the recovery was probably mostly a give back, but positive is a positive. So we at least have to acknowledge that. On the Philly Fed, that continued to be somewhat weak. So, New York doing a little better, Mideast doing a little worse. Sort of the combination of the two. But these are the early signs for the month of June, and sort of a mixed bag. Remember, previous months, particularly as we saw the debt crisis situation evolve, we saw weakness earlier. So has that passed? Does the consumer who now sees the debt crisis in a rearview mirror, and remember, 50% of them were just disgusted with the big government is functioning. And so it may have held off a little purchases to make it a little bit more an acceleration as we move forward in that area. Industrial production still weak. Even the autos were kind of weak on the weak side. So that I don't think is helpful on the manufacturing side, but it is still, the consumer is what's in focus, and the US consumer has helped. I think the markets are helping them as we're sort of making our way. It's seeming that the S&P may get back to its January 2022 level. That would be quite a run, especially given the overhang of the economy and as we move forward. So, yeah, a lot of moving parts out there. The Fed is clearly trying to hold back, but the government is spending, consumers are spending, and that's, I think, a good sign for the economy, at least in the short term. This is Scott Murray for the Daily Economic Market Shout. Thank you for joining me.